Hi, this is Michael Yardney and welcome to my regular property market update. Let's face it, what we're hearing from the media at the moment is scary stuff, especially for those of us who own property. Each day brings more doom and gloom, another report of a company failure, a government handout, or bailout as some call it, and concern about an impending recession. Some doomsayers are suggesting that you should sell up all your properties before the almighty crash arrives here, just like it has in the USA. However, other commentators say our current markets present some great opportunities. Some economists are predicting 1 million unemployed Australians, and others are suggesting unemployment will only reach just over 7%, which is where unemployment was earlier this decade. So is it a good time to buy property, or is it time to sell up everything? I wouldn't blame you if you were feeling confused. Now, before I answer that question, let's go back to look at some of the big picture stuff to get some perspective. Now, with all the negative talk going on, it was really great to hear the Governor of the Reserve Bank of Australia recently provide some balance to the economic debate. Last week, he explained that while Australia will be affected by the global downturn, our economy is relatively strong. Moreover, the long-term prospects for Australia remain strong, Glenn Stevens said. Then a few days later, Dr. Frank Gelber, Chief Economist of BIS Shrapnel, also came out with a report suggesting our residential property markets will rebound later this year or in 2010. Now, I'm not trying to play down the seriousness of the current global financial crisis or its effect on the Australian economy. To be honest, they'll be more profound than I anticipated this time last year. In fact, the changing property, tax, and in particular finance markets have made me carefully review my own investment strategies. I've had to fine-tune some, amend others, and for the meantime put some strategies aside. I'll be explaining my thoughts on protecting your assets and thriving, not just surviving in these changing times, at my upcoming round of seminars in 6 locations around Australia in March and April. Please click on the link below to get details of these seminars I'll be conducting with property tax expert Ed Chan and to find out about my special offer to you, to all attendees. Now, before I go further with all the important talk of recession, it's probably important to understand what a recession is. An economy is regarded as being in recession when it goes backwards for 2 consecutive quarters. It has 2 consecutive quarters of what we call negative growth. It stops growing. By the way, it's not uncommon for most countries to experience a recession once every 7 or 10 years. It's really part of the economic cycle. What has been unusual is the fact that Australia hasn't experienced a recession for over 17 years. Even when many countries experienced a recession after the technology bust in 2001, Australia avoided a serious downturn. Putting things into perspective, currently there's at least 14 major economies that are now in recession, or they've experienced recession in 2008. However, there's at least another 14 major countries that have so far avoided entering recession. Now, while Australia's so far avoided recession, by the classical definition, our economy still faces significant challenges. And I must admit that despite what some economists and the government are suggesting, the likelihood of us falling into a recession later this year is now pretty high. If you use a different definition of recession, tight credit, businesses and the general public holding back from spending, people losing their jobs, share prices collapsing, superannuation funds decimated, and more companies going broke, then we really are in a form of a recession right now, aren't we? While the global downturn is far bigger than any slowdown that's ever occurred in our lifetimes, it still seems that the best place to be is Australia. We're going to do better than almost anywhere else in the world. And you know what? Australia could still avoid a recession yet again. So let's quickly look at the factors that I see bolstering our economy and in particular our property markets. Number 1, there's an undersupply of housing. House prices have fallen significantly in many parts of the world, and that's reduced consumer confidence, it's stopped their spending power, and it's slowed actually the economic growth of a lot of those countries. Yet despite all the doom and gloom predictions, house prices really haven't slumped in Australia. Now sure, they've dropped a few percent, and the value of individual properties has definitely dropped, particularly at the upper end of the market, in some holiday locations, in some secondary locations. But in general, the median house prices in all our capital cities have held up pretty well. Simply, our population has been rising in recent years, but supply of housing just hasn't kept pace, and that's led to an undersupply of housing. Point number 2, we've had strong population growth. Australia's population is growing at the fastest pace in 20 years. And it's mainly due to record immigration, but in fact it's being helped by our little baby boom. In Australia, our population is growing at about 1.7% per annum, and this is countering the previous trend of our ageing population. Our higher population growth, and this isn't happening in most other overseas countries, means that we're spending more, housing is in demand, there's increasing employment and investment. I was really pleased to hear Julia Gillard, our Deputy Prime Minister, recently rejecting calls to lower Australians' migration targets, noting that businesses are still struggling to fill skilled vacancies. The third point bolstering our economy is the strength of our financial system. Australia's banks just haven't experienced the same challenges experienced by overseas banks. This means we're not experiencing a financial or a banking crisis like many overseas countries. What we are having is a classic credit squeeze. And the other thing bolstering our economy is the speed and the extent of the government stimulus. Our economy's benefited from a three-pronged approach. It's had a three-pronged economic boost. The government's increased spending and it's given us a huge stimulus. There's been a lowering of interest rates and our Australian dollar's been cheaper. So as a property investor or a homeowner, I'm sure you're pleased that official cash rates have dropped from what was around 7.25% to now 3.25%. That's a huge drop in our holding cost for our properties, isn't it? So putting all this together, I see the glass as half full, while I know a lot of other people are seeing it as half empty. If you've got a secure job and the ability to service a loan, and that's become much easier recently, now is the time to consider buying a well-located investment property. Over the last few weeks, there's been a flurry of activity, mainly led by first homeowners in the $350,000 to $500,000 price range, in some of the areas where the team at Metropole's been buying for our clients. In fact, there have been more buyers out there for the limited stock that's around than we've seen for a long, long time. Now, does that mean the markets have bottomed? My honest response is, I've got no idea. But the answer is probably not. But my question to you is, are we buying the markets? And clearly the answer is no. What I recommend is that you consider investing in a property that you'd be happy to hold in your portfolio for the long term, which has been bought at a sufficiently below intrinsic value price, so that even if the market falls a bit further, you'd still have bought well. Now, please let me take a moment to sing the praises of the excellent team at Metropole, because I'm very proud of them. I've got every faith that these are the people who can help you find that elusive special bargain investment property or your new home. Now, why I'm saying I'm proud of them is because last month in Your Investment Property magazine, the winners of the Reader's Choice Industry Awards were announced, and the Metropole team won 3 of the 7 national awards: Best Buyer's Agent, Best Property Manager and the Reader's Choice Awards. In changing times like we're experiencing, no one can help you quite like the independent property strategists at Metropole. Now, by the way, we help homeowners too, not just property investors. Remember, we've got no properties to sell, but access to every property on the market. If you want to find out a bit more about what's happening in your local market and what our research suggests is in store, join us at our Thrive Don't Just Survive property seminars I'm holding around Australia in March and April. Just click on the link down below to find out more. Now, to sum up what I've been discussing in this market update, I'd like to explain that I've got a very strong positive view of our property markets in most of our capital cities in the medium to long term. Of course, I'm certainly aware of some potential short-term problems related to our credit squeeze and the poor market sentiment. It's particularly market sentiment that's holding us back. So this means you should be looking for the right property, in the right location, at the right price, with the right rental income. If you'd like to understand what's going on and what you can do in order to thrive, not to survive in difficult times, please join Ed Chan and myself at our upcoming seminars in March and April. Please click on the link below to find out more and reserve your seats now. With all the changes that are happening in tax, finance and the property markets, I really believe you should attend.